Welcome back, everyone, to the Audacious Money Witch channel, where we talk about investing and trading stocks, bonds, and crypto assets around the world. Things are finally getting more interesting and juicy in the stock market. Do you know why? Because the unknown. You see, markets don't like uncertainty, and we are about to unveil the biggest life-changing event, not just for the Americans, but for the rest of the world. Yes, I am talking about the election. I think we are at the point where people are starting to get scared. They want to sell out before they know what is going on. Because for the left or the right, if one wins, the other side's life is ruined, at least for days. So they sell out of the market just to take the profit off the table, which brings us a great stock buying opportunity like today, where stocks are selling like discounted candies after Halloween, and yet they are worth much more to the right people. I am going to give you my take for Estee Lauder stock at this particular moment and the price level I am buying it at. Hit the like button if you are excited to buy stocks for cheap again. Let's jump right in. I just bought EL stock at around $66 a share. The Estee Lauder companies, you probably are shocked to see that price. Like I said in this previous video, they are absolutely going to have another leg down. See, Jeremy told you when the new CEO comes in, the stock is going to take off, right? But I see there is one problem with that idea. It's the dividend payout ratio. It was sitting at an unsustainable level of 244%. That means it's paying out twice the cash to the shareholders than the company can handle in order to survive. Well, now this stock is down from its peak to now about 82%. Well, the new CEO, Stéphane de la Favier, age 49, is doing the right thing, which is cutting the dividend down to a more reasonable level, which will also create more financial flexibility for the new leadership team to reaccelerate their profitable growth trajectory. The dividend was cut to 35 cents a share from 66 cents per quarter. If you saw my last video, you will know that there are two problems with this company. The first being Chinese economy. The second is Fabrizio Freda, the most outrageous, greedy, overpaid CEO on the planet. He was paid $66 million a year running Estee Lauder to the ground. Meanwhile, the average worker that actually sells their makeup products are making $33,000 a year. Anyways, I am glad he's retired and the new guy sounds a lot better.
What's this new guy like? As usual, Stefan was ultra prepared for his weekly status meeting with his boss, Jane Hertzmark Udis, Group President and Global Brand President of Estee Lauder. Only 3 months into his tenure as Global Brand President, Udis let him know that he would be taking her place at the helm of Estee Lauder on July 1st. What I admire and selected Stefan to succeed me is what makes him successful, Udis said. We were founded by ultimate entrepreneur, Mrs. Estee Lauder. She's not only worked in the time when women did not work, but she started business when women did not start any businesses. She saw the world as it could be. I find these same qualities in Stefan. Speed is the name of his game. Speed of modernization, speed of growth, and certainly speed up the corporate ladder. He was born in the US but raised in France. To take the business to the next level, he outlined a four-pronged approach. Number 1, consumer engagement. We wanted to be the best in class, he said. To that end, Estee Lauder is revamping its PR department in key cities worldwide, transforming them into a global content network with studios where photos and video shoots will be produced for social media consumption. Construction of the Manhattan studio is already underway in Lauder's Fifth Avenue office tower. It's a physical space, but it is also the new way that we want to work, to bring the most aspirational content to consumers. Number 2, the omni-channel. We need to evolve our distribution to be where the consumer is and to offer her as seamless as an experience as possible between the digital and brick-and-mortar world, he said. Being able to accelerate into the new channels while protecting the existing channels where we have built success, heritage, and equality over the years is absolutely critical. I believe that service is a role of the beauty advisor is going to be key. This company and this brand has always been high touch.
Hypermodernization. While Lauder's North American consumer is in her 40s and 50s, her Asian counterpart is in her 30s. We need to speak to different consumers in locally relevant ways, he says. Clearly, we want to go after a younger consumer too. That is important to us. To the brand's future, our influencers can be global or local. Stay tuned for an announcement very soon on this. Innovation. We will continue to build some extraordinary products. We have powerhouse franchises like Doublewear and Pure Color Envy. I see a tremendous opportunity to play and to win in color, but also in other categories. That is our commitment with my team to maintain our strength in skincare and to build on our amazing fragrance portfolio too. It's critical for us. For De La Fave, teamwork is everything. I personally define success not only by the numbers, but really by the interaction with my team. I have always been very collaborative. There is no top-down approach with me. I really believe in the cross-pollination of talents. I am proud to create an unexpected connection between people all around the world. As for the Chinese economy, the China government had earlier this month pledged a stimulus package to revive its economy. But Estee Lauder said it does not expect a boost in second quarter performance from the effort. Consumer sentiment in mainland China weakened further in our first quarter. We still anticipate strong declines near term for the industry. Outgoing CEO Fabrizio Freda said on an earnings call the company reported first quarter adjusted earnings per share of 14 cents, beating the street view of 9 cents. Quarterly sales of $3.36 billion, down 4%, missed the analyst consensus estimate of $3.371 billion. Segmentally, the skincare unit sales slumped by 7%, makeup fell 2%, fragrance decreased by 1%, and hair care dropped by 6%.
Organic net sales dropped 5%, mainly due to declined consumer sentiment in China, leading to a weaker prestige beauty sales, and low conversion rate in Asia travel retail and Hong Kong SAR. Additionally, lower replenishment order and inventory pressures from a slowing retail market further affected sales. In the quarter under review, Estee Lauder reported a net loss of $156 million compared to a net earning of $31 million in the prior year, primarily due to the charges associated with telecom litigation settlement agreements of $159 million in the aggregate. With this complex industry landscape, including the particular difficulty in forecasting the timing of the market stabilization and recovery in China and Asia travel retail in the context of leadership changes, we're solely issuing an outlook for the second quarter and withdrawing our fiscal 2025 outlook, Fabrizio Freda said. Estee Lauder exited the quarter with cash and equivalents worth 2.35 billion, and inventory and promotional merchandise worth 2.255 billion. Long-term debt as the quarter ends totaled 7.31 billion. That's a fucking lot of debt.
Outlook. Estee Lauder expects adjusted net earnings per common share to decrease between 77% and 60% and range between 20 cents and 35 cents, significantly below the $1.06 consensus estimate. For the second quarter, the company's reported and organic net sales are forecasted to decrease between 8% and 6% versus the prior year period. If you are into the stock and want to buy it, just remember this business is in decline right now. So you have to take into consideration all of the risks. Don't make impulsive decisions. From the technical, we can see right now at the Halloween price, EL stock is currently traded around $69 per share, with RSI at 17. It's extremely oversold with huge volume. I think we are close to a bottom at this price now. That's why I am loading up. You know, it's now traded at a forward PE of 21 and around $25 billion with PEG ratio of 0.95, meaning it's really undervalued. With the strong brands they own, the price is not going to stay cheap forever. And we just got a send-off from Jim Cramer. He said he is not touching this.
So you might like this one, Tim.
Okay.
You know, sometimes you make the most money when it goes from really terrible to just bad. That might be time for Estee Lauder, right?
you.
Ooh, really? Throwing an Estee
Thank
Lauder
you.
in there. I
Yeah,
like that,
yeah.
Dan. Yeah.
So we are golden. Woohoo!